Used Tesla prices skyrocket. We've been saying for years now that Tesla's vehicles have a high resale value. It hasn't been uncommon over the years to see pre-owned Tesla vehicles on the used market that cost about as much as, if not more than, a new model. That said, the situation has amplified of late. And now it seems people are making a significant amount of money selling models that they've owned for years. Not only are older models selling for higher prices than new models even as Tesla continues to raise its new car prices, but also, according to Electrek, some folks could be making $6,000 to $10,000 on a car they've owned and used for years. At this point, it's likely we all know a typical car has never been a good investment opportunity. At least in most normal cases. Cars lost plenty of value as soon as you drive them off the lot. However, with the shortage of new cars, the used market has been booming. And prices are high. People have taken to selling their newer cars on the pre-owned market for a premium over what they paid new. So, to be clear, this is not just related to Tesla. Though it seems the electric automakers' vehicles are selling at an even higher premium on the used market than many other cars. This is likely due in part to Tesla's growing popularity, along with the popularity of EVs in general. Moreover, the demand for Tesla's vehicles is so high that you can't get a new one for many months after placing an order. To get a grasp of used prices on Tesla's models, all you have to do is visit any major online used car sales website. However, Electrek looked specifically at Tesla's own used car sales to see where prices are headed. The publication points out that the US automaker handles much of its used inventory. And unlike other used car websites, Tesla's prices are non-negotiable. Source reposted and summarized from Stephen Loveday at Inside EVs. My take: this is a crazy time where the used car prices are so crazy high. I don't think it will last. Especially for the ICE vehicles. Tesla insurance could pose threat to auto insurance industry. April 28, 2022. Tesla insurance could pose a long-term threat to the US auto insurance industry, says Morgan Stanley. We're trying to turn a nightmare into a dream with Tesla insurance, says Elon Musk. Analysts at Morgan Stanley said Tesla insurance could pose a threat to the US auto insurance industry in the long run. This may come as the company expands its new insurance product that uses real-time driving data. At the same time, they noted that Tesla's product does not pose a threat to the industry in the short term. According to analysts, successful long-term market penetration depends on the complexity of the pricing and distribution strategy. However, it is worth considering that Tesla will undoubtedly have the best data on their cars. The real-time feedback loop on driving behavior that is contained in the insurance offering can lead to safer driving, which can lead to lower insurance premiums and higher acceptance rates. We will monitor TSLA's underwriting results closely as it gains more traction, the analysts said. Meanwhile, Tesla customers express great satisfaction with their monthly payments with Tesla insurance, which in some cases are 60% lower than they paid with previous insurers. With real-time data, Tesla is trying to do something good for its customers, save people money, and make roads safer, according to Tesla CFO Zachary Kirkhorn. Tesla CEO Elon Musk also explained that real-time data provides feedback to Tesla. This is how the company sees whether there is an accident, whether it is large or small, and what are its causes. This allows them to think about how they can change the design of the car or the software to minimize the likelihood of a particular accident. Musk said most accidents are minor. But how do you have those accidents occur less frequently? And how do we make the repair associated with that accident super fast? Like, aspirationally, it would be a same-day repair of a collision, which is night and day difference compared to sometimes having to wait for a month while insurance claims are settled and figured out. Because Tesla is also doing collision repair. Source reposted and summarized from Eva Fox at Tasmanian. My take: good. I hope it happens. The auto insurance industry needs to be overhauled. Tesla expands its virtual power plant in Australia. April 28, 2022. Tesla is expanding the nation's largest virtual power plant to New South Wales, southeast Queensland, and the Australian Capital Territory as part of its Tesla Energy Plan. This will contribute to the stability of the electric grid and reduce the cost of electricity. Tesla posted an announcement to expand its virtual power plant to new regions in Australia via LinkedIn. Although it was posted in a modest manner and did not contain many details, the announcement is big and important news. as the changes will bring great benefits to the region's power grid and its users. Australia's largest virtual power plant has expanded to New South Wales, South East Queensland and the Australian Capital Territory with the Tesla Energy Plan. Connect your Powerwall with the Tesla Energy Plan today. Tesla began offering access to the Tesla Energy Plan in South Australia to Powerwall 2 owners in 2019 as Australians were in dire need of a dramatic reduction in electricity rates. To this end, the price of Powerwall 2 was quickly reduced, and existing subsidies for its purchase in South Australia provided a very favourable opportunity to install Tesla Powerwall in many homes. Thus, a powerful energy network was formed, Virtual Power Plant (VPP), which began to support the entire energy market of the region. VPP showed its clear advantage later that year with an unexpected coal power outage in Queensland. South Australian Powerwall owners signed up for the Tesla Energy Plan came to the rescue and helped keep the grid stable. The new expansion in New South Wales, South East Queensland, and the Australian Capital Territory will further expand the VPP, and therefore bring much more benefits to both the entire energy grid and individual households. Our world-leading technology optimizes the use of your Powerwall based on your energy needs, market conditions, weather and anticipated grid events to ensure it benefits your home, while also supporting the community with clean renewable energy. Tesla says on its website. In return, you receive competitive energy rates, grid support credits and Powerwall credits to reward your participation. Participation in the Tesla VPP provides customers with energy savings through flexible rates for the duration of use. This helps reduce energy bills while providing greater access to renewable energy throughout the local community. Customers are guaranteed a minimum 20% backup reserve during a grid outage. And the Tesla Energy Plan limits Powerwall discharge cycles to the grid to 50 per year. Source reposted and summarized from Eva Fox at Tasmanian. My take: the virtual power plant do not get the credit it deserves. It's an excellent way to decentralize and support the power grid. Tesla continues to face opposition to overturn franchise law in Connecticut. April 28, 2022. Connecticut's franchise law has been around since 1972 and stipulates that auto manufacturers must sell their cars through third-party dealerships. After 5 attempts in as many years to pass legislation that would allow the direct sale of electric vehicle EV in the state, there continues to be fierce and misguided opposition from opponents of what is frequently referred to as the Tesla bill. On Tuesday, Senator Julie Kushner, D. Danbury, a former regional director for the United Auto Workers UAW union, said she believes in increasing the number of EVs on state roads, but sees no need for such a bill. Showing her bias, Senator Kushner then referred to Tesla CEO Elon Musk as ruler of the world, even though the bill is not Tesla-specific and would benefit other EV automakers like Rivian and Lucid. I'm really a strong believer that we need to move to electric vehicles. And I think we're doing that on many levels in the state. And I see the car manufacturers are moving in that direction as well. I don't see the need to do a Tesla bill, said State Senator Julie Kushner. D. Danbury, a former regional director for the United Auto Workers Union. I don't see the need to advance Elon Musk, who is already ruler of the world. She added via New Haven Register it was also claimed that the proposed bill would harm consumers by undermining Connecticut's consumer protection laws, and also threaten the jobs of the 14,000 dealership employees in the state. Advocates for the bill paint a different story. Senator Will Haskell, co-chair of the Transportation Committee and sponsor of the bill that failed to pass last year, says that physical locations set up by Tesla and other EV makers would still be subject to those same consumer protection laws. Senator Haskell also pointed out that the law should make it easier for consumers to make the switch to electric, not harder. Customers currently have to travel out of state to purchase or service their Tesla vehicle. Despite this, Tesla is still the #1 selling EV in Connecticut. According to EV Club of Connecticut President Barry Kresh, the 8,944 registered Teslas make up 41.8% of all EVs in the state. The next most popular is Toyota with 3,238 EVs registered in Connecticut. Senator Haskell is trying again to get the legislation passed. The bill passed through the Transportation Committee last month, and will next be presented for a vote on the House floor. But no date has been set for when it will be presented. Source reposted and summarized from Darren John at Drivertisla Canada. My take: these franchise laws do not protect the consumers in any way, shape or form. Let's get rid of them and move forward to a better world.